Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Here's your U.S. markets wrap with me, Ryan Huang. So we've got a bit of a muted session last night. An earlier rally in stocks fizzled out after Fed Chair Jerome Powell warned that tariff-driven economic uncertainty and inflation risk continue to complicate the central bank's mission to ease monetary policy in earnest. So that saw the Dow losing 0.1%. The S&P 500 pretty much flat, and the Nasdaq Composite was up just 0.1%. And help us unpack the FOMC's rate decision is Deborah Cunningham. She is the Chief Investment Officer for Global Liquidity Markets at Federated Hermes. Deborah, good morning. How are you doing today?
I'm doing great, Ryan. Thank you. How about yourself?
I'm doing great as well. Thank you so much for joining us to go through the Federal Reserve's decision. And we've got pretty much, it seems, what was widely expected by the market. Rates were unchanged this time around, keeping it at 4.25 to 4.5%, which is where it was since December. And the central bank is expecting inflation to remain elevated while seeing lower economic growth ahead. What do you take away from the thinking that went through to this decision? By and large, it did not seem like a big surprise.
No, not at all. And it's one of those markets where it's hard to make kind of a boring or expected rate decision, and a press conference and a press release that was pretty much as noted it would be pretty exciting. So I'll try my best, but there's not a whole lot of excitement that came along with this meeting in particular. I think the series of economic projections that was updated from the December meeting still has two cuts expected for all of 2025. One in either September, October, and then one in December. So you're still, ending the year at something that's maybe like a 3.9%, when you look at the mid-level. There was a little bit of change from an unemployment expectation standpoint. It had been originally forecast back at the end of December as going to something that was about 4.2%. Now it's looking like it will end the year at 4.5%. But again, not really something that's out of kilter for where the market is expecting. Chair Powell did say a lot about that unemployment rate during the press conference, where basically he denoted that both labor and demand are slowing. They're lower than what they were, but because they're both lower and both slowing on a pace that's similar, the unemployment rate is not moving very quickly at all. And therefore, in his estimation, remains solid. So it's an item to deal with and discuss, but it's not a headline sort of issue. And I think unlike the last press conference in the, from the May meeting, where there was a pretty big divergence between the hard data, i.e. what was reflecting, information that was already behind us, versus the soft data, which was reflecting things like confidence and, expectations. And the soft data was much, much lower and going negative last at the May meeting press conference. That seems to have reversed itself in a pretty positive manner for the June meeting discussion. So, it's hard to see where there were problems that, yes, uncertainty from a tariff standpoint, not really showing up too much from an inflation standpoint, but not really anything that is particularly worrisome from at least the rates market at this point.
Okay, let's unpack that a bit, because you mentioned a couple of things that the Fed's been looking at, including the tariffs. In that vein, we've seen U.S. President Donald Trump slamming Jerome Powell recently, calling him a few names, saying that the cuts should be more aggressive, called Powell stupid for not pushing the committee to cut more. He has been pointing to some of the inflation data, saying that, hey, it's about time, things are right to do so. Are you seeing that being reflected, and to what degree are the tariffs now being felt in the economy?
They really are not yet at this point. I mean, maybe with certain, the auto sector potentially is one of the most impacted. You've got maybe the energy sector being impacted a little bit by tariffs, but even more so with regard to the uncertainty in the Middle East at this point. But it's not really in the numbers yet at this point, which was why the soft data divergence that we saw back in May was important. But that to some degree has been a little bit erased at this point and is not as problematic. Now we are, more than 2/3 of the way through the 90-day tariff extension process, time frame. And I think as we approach that, I think it's a July 9th time frame that we're looking at for when that extension date is over. So as we approach that date, I think we'll have some more volatility and some more discussion around it. But, it could be extended again. There could be, some ratifications with various countries and others that are, again, pushed forward. I feel like the market is not being as upset about these delays and sort of unexpected timing and unexpected announcements today, certainly by as much as they were back in the March and April timeframes.
All right, talking about what to expect, let's take a look at what the projections are for growth. And here you've got the GDP forecast being trimmed slightly, and this is a drop of 0.3 percentage points for GDP. So all in, you are looking at expectations that we are seeing GDP growth for this year at 1.4%, inflation hitting 3%. What are the risks of stagflation this year, especially when you look at what's playing out in the Middle East and how oil prices have been going through quite a bit of a rally in recent weeks, up 20+% in the past month? What is the risk here for it to feed into the inflationary pressures?
Well, I think slower growth is what's expected. From our standpoint, we don't think recession is completely off the table, but it's a low probability at this point. And when you look at slower growth from a stagflation standpoint with, inflation higher, growth lower, it's certainly, not our main expectation or forecast, but it's got a higher percentage allocation to our what ifs that could happen. It really wasn't addressed this time by Chair Powell, but the last time he was kind of pressed on. So what happens if inflation goes higher and employment and growth go lower? What does the Fed focus on at that point? Because, with the employment side, you would think, and the GDP side, you would want to be stimulative and lower rates. But on the inflation side, if it's going in the, higher direction, you want to potentially stay where you are, even raise rates. And his answer was, and I think it's a good, sort of story, whichever one deviates the most. So if inflation is off by, 1% and GDP and unemployment are only off by 0.5%, then maybe you focus on the inflationary side. But if it's the opposite, you focus on the growth and the, full employment picture. So I think it's a needle to thread, and that's what's attempting to be done by the FOMC at this point. Thankfully, it seems as though President Trump has moved on. Yes, they're still name calling, they're still badgering, but I think the expectation, any kind of intervention or any kind of change in the May 2026 end of Chair Powell's chairmanship of the FOMC, the focus now by President Trump seems to be on coming up with credible nominees for when that term actually ends, which is, ahead of the game by, a good 9 months. But the market, I think, is thankful that, the word bantering between the two has at least slowed down a bit.
All right, Powell's term is up in May 2026, so we'll see if he's going to be left alone to drive the bus, so to speak, or if Donald Trump's going to be a very active backseat driver. All right, and helping us out this morning has been Deborah Cunningham. She is the CIO for Global Liquidity Markets at Federated Hermes. Deborah, thanks for your time as always. Great chatting with you.
Great chatting with you too, Ryan. Thank you very much, and have a great rest of your day.
You too. Stay with us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.